Hey everybody, welcome to Trading the Close. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. As always, I'm here to break down the daily action in the markets, commodities, crypto, and stocks. We're going to look at some different things and ultimately find out what some after-hours movers are doing, like ADBE that is about to report earnings. All right, so let's get into the action today. What we're looking at is a market that is positive. The NASDAQ really led the day, and this was on the back of Broadcom's earnings, right? So Broadcom, great day. Big company, by the way, was $700 billion before the move today, close to $800 billion now, maybe one of the next few trillion-dollar companies in the works. But either way, that was carrying the NASDAQ, lifting the semis once again higher, with NVIDIA leading the pack. On the other side, you did have the Dow fractionally lower today, down $31. Not a big move there, but basically a flat day. And even the S&P 500, barely positive, just up 5 points on the day. So again, the NASDAQ was the leader today, the S&P flat to positive, the Dow flat to negative. Now looking at oil, slightly down on the day, down about 20 cents, around $78 a barrel. And if we look at gold, gold actually taking a hit. Now, if you followed what I've been saying about the charts via the game plan, the technical analysis, we knew that gold was likely going to go lower. It still actually should go a little bit lower. We'll look at that chart in just a little bit. And lastly, Bitcoin, folks. Yesterday, nice move up and really giving it all back today. Even yesterday, it was up a lot early in the day and couldn't hold its gains. And that's a concern if you're someone like me that follows the charts and the data. The data should not be, we should not be seeing Bitcoin struggle here. This is a risk-on environment. Just look at the semiconductors, look at Apple's move, look at all of these moves in the markets, and Bitcoin should be ripping to new all-time highs, and it's not. Again, still holding some bullish kind of bias per the chart, but it's getting iffy now, and we'll look at that as well. Here's your heat map. NVIDIA, enough said. $3 trillion plus stock holding the markets up. That's keeping the NASDAQ positive. You throw in Broadcom. I think this big green one here is Broadcom as well. Just the two of those are keeping this market, at least the NASDAQ, afloat. Look at everything else, mostly red or gray, which means it's either down or flat on the day. It's these two right here. It just is what it is. It's a market that is being led by so few names. In fact, we're going to look at the Russell 2000. Follow me over here, guys. Let's take a look at the S&P 500 intraday first. It was a day where we saw an open higher on the back of PPI data, right? So the PPI data coming in lower than expected, although the jobless claims were much higher than expected. Might be showing the labor market cracking even after that strong non-farm payrolls last week. But again, we opened higher. We didn't take out yesterday's high, which technically is important. We sold off. This is always what happens, right? I shouldn't say always, but most of the time, the first hour of the day sees selling. Then you see the sideways chop, and then the afternoon is a float higher. Why? Well, simply put, this is institutional selling. So they're dumping into retail players, buy the dippers, whatever you want to call them, that are coming into the market on the good PPI data. It's getting people to act and put money in the market. The institutions sell into that. Then the institutions say, you know what, it's a 10:30, 11 in the morning. It's lunchtime. Let's step back. The volume's getting too light. We'll crash the market if we keep selling into it. So you have the sideways period. And then by the afternoon, the light volume gets so light that ultimately just a few buyers are able to lift you back up here. Tomorrow morning, we'll see. Maybe we open up again and we'll watch to see if we see that selling pressure. But this is how things go, guys, in the real world of stocks and institutional action. Okay, let's go to a couple big things here today. We did see the dollar regaining most of its drop early this morning. So this morning we came into the PPI data here on the chart up pretty nicely. It then got pushed back down. The dollar has come back up. On the other side, we've actually seen the TLT, which is rates. The TLT goes higher when rates go lower. Look at this beautiful channel and the breakout. This is, again, a position we have in smart money stocks and ETFs that's now very nicely deep in the money after we bought right down here on this trend line and have just been enjoying the ride as it moves up. So nice little move there. Now, if we look at a couple other stocks today, Broadcom was a big one. This morning in the game plan, I said to you guys, listen, here's your channel. You're above it at the time, but look for it to come back into this orange trend line. Guess what it did? It came right back in, and we're going to basically close right on that orange trend line. It's amazing how channels work, guys. Channels are one of my favorite things to use in technical trading, and they work unbelievably good for finding highs and lows on charts. You'll see it probably, I would say, about 70 to 80% of my charts that I show you guys will have some sort of channel on there. All right, I got to talk about the Russell here, guys. The Russell is struggling. Now remember, the Russell is 2,000 companies. That's again in the Russell 2000, it's 2,000 companies. The S&P is 500 companies, the NASDAQ 100 is 100 companies. Okay, so in theory or in reality, the Russell 2000 is the biggest gauge of overall economic prowess of companies. When you look at the S&P, there are six stocks in the S&P that make up over 30% of the entire S&P 500 by weighting, meaning that the market caps of these trillion-dollar names, the NVIDIAs, the Microsofts, the Apples, they dominate to the point where 494 companies only make up about 68% of that index. It tells you how much power these big names have to keep the market up. In addition, we talk about the NASDAQ 100. Over 40% of the NASDAQ 100 is just those same six companies. It's pretty scary how kind of isolated and overweight these mega caps have become. Now, the reason I bring this to your attention is because if we look at the Russell, there's this nasty chart pattern. So first, before we get into that, and some of you guys may see it just from looking at this, if not, I'll go through it and walk you through it. But number one, we had this great CPI data yesterday and PPI data today. Rates are falling, but look, the Russell was up here yesterday on the daily chart, and by the end of today, we're basically barely positive. The Russell 2000 is barely net positive between yesterday and today, yet the NASDAQ and the S&P are much, much higher. Why? Because Apple's run. NVIDIA's been up 2 straight days in a row again. All of these mega caps that dominate these lower indexes, which again we follow, the S&P and the NASDAQ, they are just controlling things. But this is a gauge of the bigger market. In addition, look at this, guys. This is what we call a head and shoulder pattern, and this is something that should be on high alert for us as technical traders. This is not a good pattern. Here's your shoulder, your left shoulder, here's your head, and here's your right shoulder. And again, notice the resemblance to a human body. Head's in the middle, it's got to be the highest point. The shoulders are on either side. Now, the kicker is this, it hasn't triggered yet. And so really until it triggers, it's not the end of, it's not really the worst case scenario. But what you do is you take the neckline, this low here, okay, we connect it to this neckline here, or this, basically it's armpit to armpit, and you draw a trend line through those, and that's your break point. If price violates that line, you see a usual big drop. Usually you'll see a big drop. I calculated it out. If this triggers, you got 15% downside in the Russell 2000, the IWM. Now listen, right now it's still, in all fairness, it's about, this is at 194, it's at 202, so you're still a little ways away. You're still about, we'll call it $8 away, right? So you still got a little distance to go where it has to come down before it triggers. But this, to me, when I look at this, it doesn't make me say, oh my goodness yet, but it puts it on alert. As a technician, I need to be on the cutting edge of potential pattern triggers so that I'm fully aware when something happens, I'm not caught off guard, right? So just something to keep an eye on there, and I wanted to frame it with how the S&P is calculated, how much the weightings are of those trillion-dollar companies, and really when you look at the broader market view, what the performance is. And by the way, ask yourself this, has the Russell, which is 2,000 companies, not including the trillion-dollar stocks, has this made new all-time highs since 2021? And the answer is it has not. And again, that just goes to show how isolated the rally has been to such few companies that make up such a massive amount of those other indexes. This was your high in 2021, guys. Look at where we are. Since then, we haven't done anything. In fact, you could make a case that you have a bear flag formation here off of this down move. That's not a good pattern at all. All right, so I just wanted to go over that today. Quickly going into a couple other things. Adobe reporting earnings after the bell. So far, I'm not seeing Adobe doing anything just yet, but I will keep you guys posted. It looks like it went up to 463, but that's not a big enough move to get my attention. And then if we look at GE, I wanted to bring up GE to you because this is another great channel, and then look at what happens when the channel breaks. And you guys can use this at home on any chart that has volume to it. Remember, if it doesn't have volume, it's not going to follow the same characteristics. But look at how you closed below the channel here, and then what type of pattern is this? Classic bear flag, and then look at the drop that ensues today. GE down very, very nicely there. So just use these simple techniques to really improve your probabilities of success when trading. Bitcoin today, I kind of touched on this before. again, when you look at Bitcoin, yes, it's still above the orange line, which keeps it on a positive bias, slightly bullish bias. But you look at this, and the last couple days, the markets, the S&P and the NASDAQ have gone up very nicely. And this is net negative and gave up all of yesterday's gains, even though we had that great CPI and the PPI data today. All right, next up, we look at gold. Gold also moving lower. You have this little bearish pattern here. If we break 2280, your next wave of selling comes in, and we should go down to about 2200. For me, that's what I'm eyeing as a potential opportunity to start accumulating some swing trades on gold here. And again, if we get down to that level, I will buy there, and then I'll buy more down in this range. Silver, same kind of deal, staying within this channel. Look at this beautiful little channel right here, getting very close to a potential first support. If it breaks that, though, 2550 could be in the cards for that one as well. RH, which used to be called Restoration Hardware, reports earnings after the bell. So far, just a little bit of after-hours whip. This is a pretty thin stock, so I don't know how much action we're going to get. If we flip back, wow, look at Adobe. Adobe ripping here into the end of the day here. Wow, look at this after-hours move. Holy cow, what a pop on Adobe. That is impressive to say the least here, as that thing is making moves. So Adobe, big move. Honestly, I'm going to show you something on the chart. If I was looking at this, and I'm not in it, but if I was looking at this and I was gutsy enough to play earnings, and I'm not generally, look at this gap fill that it hit just recently. So you had this major pivot right here, this here, and then there was a gap right here that filled. Price was just off of that gap fill, just like Oracle, just like Broadcom. These big names are finding a way through AI, and I'm going to guess in the highlights of this that that's probably coming up. But what a move on Adobe in the after hours here. That's just ripping to the upside. That's a big move on Adobe. Over $500 from $450, over 10% move here. All right, guys, on that note, I'm going to bid you farewell. As always, thank you for tuning in to Verified Investing's Trading the Close with me, Gareth Soloway. I'll be back tomorrow morning with more action-packed analysis and trading levels for you in the game plan. Have a good one. Talk to you later. Take care.